Hello guys, welcome to the Trading Parrot. As if it wasn't enough, we lost the daily, the 4 hour, and last night on the weekly time frame, we have broken down. I want to cover this event, compare it with what we were doing in 2020. For the short term, I want to keep an eye on what happened on the 25th of December in 2020 as well. That could potentially bring in some relief rally. And of course, I'm going to cover the 4 hour or breakout seems to have found a pivot, and I'm looking forward for the completion of the target. On the daily, things are not looking very easy for the price action to recover, particularly when looking at these liquidity levels. Alright guys, we have a lot to cover, and I need to make sure that this video doesn't turn into another 30-minute beast. I know that many of you are preparing for holidays, if not already on holidays, but I want to make sure that you don't miss the most important price action and details. With the holidays in here, you can see that the Google searches captured by Google Trends has put a new low of 34. That means that we have lost some retail. You can tell that in 2020, around end of December, we were putting a new higher high in terms of interest in Bitcoin. Of course, the price action by Christmas was putting a new all-time high above $20,000 and just retesting at around 22K. By the 25th of December, we broke that all-time high, crossing the second CPR level. We all know that we saw a rejection with the first CPR level. So all I'm hoping is that either by the end of December or early January, we pay due respect to the alpha coming from CPR, which states very clearly that if within a month we touch the resistance, in this case 108K, let me zoom in so you believe me that actually we touch that resistance by the dollar, and after having done that, we should be expecting a bounce in the market. That is what the CPR model says. Of course, no model is always perfect. I think it's a bit disappointing to see this, but it's kind of a consequence of the actual price action that we are seeing at the moment. Some people are giving up, that is true. On the open interest, you can see that we have more than confirmed that breaking above $32 billion in open interest aggregated from all exchanges wasn't something that Bitcoin was ready to do. We just hit 108 and came back down. Right now, the open interest is at the same levels as the 3rd and 10th of December. Those prices were 96K before, 97K previous bottoms, and we are roughly at the same levels with the same level of open interest. It is good that we clear out that additional amount of open interest due to the failed move above 108K, and I am hoping that we are not going to break this floor and start creating any sort of big liquidation to the downside. December is slightly in the red with 0.42% today. I wanted to cover also the yearly chart, which many people don't pay much attention, but we are 1 week away, more or less, from closing another yearly candle. And the most popular takeaway when people look at this, it's seeing that red, which signifies the bear market, and then you get 3 candles up, bear market, 3 candles up, bear market. So if you take the same approach to interpret this, we should be expecting another green candle somewhere in here. And against this hypothesis, we should always challenge everything. We can say that in here there were 4 candles up. That was the early times of Bitcoin, someone might say. And then after we mature, we turn into this cycle of 4 years with 3 candles in green and then 1 in red. So many maxis are gonna say it wouldn't make any sense to have a red candle in 2025. To that I will say never, but I agree we should have green in 2025 based on past performance. With our signal on leverage squeeze, which I publish on Telegram, Instagram and Twitter, links are in the description. I actually did great closing my deal at 2.5 profit. I mentioned that I did it because I don't have time to really follow up with the deal over the weekend, but it has had some move down. The previous signal did more or less the same. It found a local top at 64, came back down to break even, and then started rallying. But there are other signals where that's not the case, like for example in here in June. But June is summer, it is a bearish month. We are supposed to have a bullish month. So if December somehow ends up having some sort of Santa's rally, then when we look back at the signal, we are going to be like, why on earth I didn't take it, or why on earth I didn't let it run longer. As I've been saying on the daily, we have lost the structure. We have a lower low at the moment, and if we cannot put a new higher high to invalidate that above 106k, then there is no way we can defend this price action. At the moment, each and every candle is getting bought below 95k. You can see that is the current support. We have pinched twice the SOPR pivots of the month of December as well. And this pullback that we are having in here overlaps with the sideways that we saw in 2020. And the only reason I'm keeping an eye on that is because on 25th and 26th of December in 2020, we managed to exit this bull flag. This doesn't look to me in this area in here like a bull flag. Indeed, it looks like we put a flag and we broke down from it. But if you want to buy that hopium, then in theory, we should be starting with a push up from around here, 25th, 26th of December. I have to say I have my doubts, but there you go. If you want to consider it, it's all on you. The 4 hour seems to agree with that. At least so far, we haven't broken the support. We got a breakout in the middle of the weekend on the 4 hour RSI. We came back down and we put a higher low. So now we need to go for the higher high if we want to continue with this rally towards 54 RSI. If we look at the price, 54 RSI is 98.5k. So pretty easy to achieve. If you consider it as a resistance, it's around there. Of course, if we manage to close a 4 hour candle above that, let's say 99k, 99.5, then if you've been studying with my free tutorials that you can find on my website in the playlists and then go into trading tutorials, you will completely understand what I mean by a second layer local breakout in that case. And if we did that, then we can start talking about 105.7, which is currently the global resistance located at an RSI of 70. On the daily, things are not looking that great. You can see that from the analysis of the weekend, we plot this megaphone pattern in here. We said that this was the handle, this was the width or the height of the megaphone. We broke below it, and at that point over the weekend, we were testing RSI 53, and I say that the most likely scenario, if we see a rejection from 53, is to start putting new lows and continue with the trajectory towards RSI 30, more or less fulfilling this extension that comes from taking the handle and then placing it in here. It gives us a journey into 30. I also say we don't do those things at this time in the cycle, but we saw the rejection. The rejection is recorded in here. You can see that is the RSI of 53 on the daily, and you can see if I zoom in that we pinch the 53, saw the rejection, and from the high to the low we have almost done 6% down. If we would have closed above this resistance, we will be in a completely different place, of course, but in the channel we just do what the price and the RSI is saying, and at that point RSI say, hey, go back where you came from, keep going lower. I think in this area in here, from where we are, RSI 46 to 30, somewhere we should be looking for longs. It's an area of value, it's a global support, and I feel like we're not gonna fulfill the full target of 30, also because the statistics are starting to come up. At the moment they are at 32, but eventually they might meet with the RSI before it reaches the full target of 30. We have out of 3 order blocks in here exhausted already the first, the top, that liquidity is gone, and probably half of the second going from top to bottom. The bottom one, we haven't used it, and that starts from 89 to 87. We're gonna talk a little bit more about 88, 89 in terms of liquidity and other aspects in the rest of the video. In terms of CME, we didn't form any gap, but price went straight into this area. I don't call this a gap because there is a wick in between these two candles, so not much to say about CME gaps apart from the pending one we have at 77k, which I'm hoping we don't need to go there at this time in the cycle, because that really breaks a lot more the structure, not just on the weekly, maybe on the monthly as well. When it comes to big whales, I am not seeing any significant change, they are still here in either accumulation or really not taking many measures based on the current price action. The short-term holder realized price is at 85k, so keep a note on that number, because that number, when there is bearishness, tends to attract like a magnet the price action, and that is because that represents the average holding price entry from short-term holders. Short-term holders, when they panic, they tend to sell and close their positions, which contributes to attracting the price sharply towards that point. What's new in this market, in this cycle, is that we tend to go beyond it and not really respect it that much. We had 2 days of outflows on Bitcoin ETFs on spot that did a small damage to this parabolic move, but we have seen events like that multiple times during the parabolic move without necessarily causing any drama to ETFs so far. We are now at 73 in the grid from the Fear and Greed Index, and on yesterday's candle weekly close, we have a sell signal coming from Cerberus. If you've been watching my channel for many years, you probably know what I'm talking about. This is an oscillator that tracks allocation in the market against stable coins, and during a bull market, I tend to not pay that much attention to the sell signals. For example, in January 2024, we have one that had a drawdown total of 21%. In March 2024, we spent 8 months in sideways after the sell. This sell is currently confirmed. Now we are pointing down to 62. If we go to the previous cycle, the sell signal print at the bottom of this drawdown of 20%. We have further sell signals. This one on February called for this top with 51% drawdown. So in bull markets, I don't care that much about the signals. If I smell that we are coming to the end of a bull market, the sell signal tends to be the best time to get rid of everything. For example, on the 22nd of November 2021, that sell called for the beginning of the bear market with 73% drawdown after. If the bull market is about to resume, those sell signals tend to be the best entries indeed. So let's talk about the weekly time frame. This RSI breakdown is probably the ugliest thing that we need to cover today. If we look at the past performance, in December 2020, we were at an RSI of 83, just about to explode to almost 95. In this cycle, we went to 78, 79, and we saw a rejection pushing us back down to 66. If you look at the full bull market after the megaphone pattern area in here, we are kind of respecting the yellow trend line if you want, but we have taken a big loss in here in terms of momentum, and I'm sure that this is going to affect the upcoming moves for the RSI. This is really annoying to see, and I'm just hoping that in the upcoming weeks in January, we reclaim the trend line, but every time that you take a hit like this, probabilities start going against you. We also confirm the bearish cross on the weekly stochastic RSI. We are now pointing down. You can see that sometimes you can get some recoveries and then go back to the top of the range using a few weeks after. And if you look at the stochastic RSI in the past cycle, from November to January, we stay on top of the range, and we came down in the first or second week of January. We stay in the low end while the price was still putting higher highs. Those are bearish divergences. Obviously, there is a breakdown of the RSI towards that trend line that happened only in February, actually end of February. And if we compare what we did in here end of February with what we are doing right now, seems to be kind of the same move, right? Stochastic RSI breakdown on the weekly, breakdown of the trend line. And in my opinion, we are doing that a little bit too early. Indeed, what we should be doing right now is being at this top of the end and put the highest level of RSI on the weekly. And the only explanation I'm currently finding is the fact that in 2021, we got into 95 for the first time above 83 in January, whereas this cycle we were already at 88, which is again above the 83 once. So the explanation will be this rally in here was so overextended and so early that might have taken some of the energy that we should have reserved for this time in the market, and now we are kind of taking hits earlier than supposed to be. But take that with a grain of salt, and remember that on the breakdown in March 2021, the retest, we still had higher highs in the price. So after this breakdown, if I was completely unbiased and I just say what I'm supposed to be saying in here, hate it or love it, we should now potentially even go to 120 or 110, putting new highs in the price, but at the same time building a channel down, calling for eventually a major crash. And I'm not just coming up with that, I'm just pretty much looking at what the RSI does there and overlapping the expectation in here. Do I prefer that that happens? Of course not. I want to go to 200k, I want to re-enter the trend line, put a new high, get to RSI 95 and see Bitcoin at 200k. Sure, what is the RSI saying? It's just telling us that today that is less likely compared to 1 week ago. Let's look at the liquidity maps. You can see that 100k at the moment has a decent amount of liquidity for a small rally. That will be a rally of 4k to the upside. We got some liquidity as well at 98.5, and below the price, the most packed areas are 89 and 88. On the longer term trading different chart, you can see that area a lot more clear, the 88 to 87. So that is calling for a move to take it and put a new low relative to the 92 that we visit on the 20th of December. Where do we have red above the price? Well, we have to go all the way to 114k to take that. You can also see that this area of liquidity is very similar to this one in terms of size, so I'm not sure why it's not showing it as red, and 114 is definitely larger. If you look at the ask versus bid ratio, you can see that the ask has been reducing. The ask becomes significant in areas where there is typically distribution, because it represents limit orders above the price expecting to find a better deal to sell. At this point in time, it seems that longs are entering. We have to look later in other charts whether those are small accounts or large accounts. Of course, I will prefer those are whales rather than shrimps, because those are usually calling out in the wrong direction. The order book remains heavy at around 110k. That support that we have temporary was at 91k and it has reduced significantly, probably half of it only left. You can see it if I increase the percentile. If we look at the 6-month chart of the order book and I focus just on brown and pink, those are the largest whales, I still have the feeling that there is some accumulation that is pointing up, maybe sideways, but overall pointing up. Yesterday we had this breakout on the delta. That means that longs were stepping in here. We now know that from different sources. That is a breakout on longs, and that has helped the price to find so far a higher low, which is nice to see. And now the question is if those longs can actually reach 99k and form a double bottom formation, so we can start targeting 105 once again. We are probably going to end up seeing that if those longs remain persistent and getting into the top of this area formed by this trend line. You can see that most of the times when we get a breakout on the longs, then that is what we expect. Price going up, breakout is in here. There's a lot of shake in this area, but eventually still we reach the top of the channel. In here we get to 105k. Then we have another move to the top of the range and we reach 108k. The performance of this has been very good so far. Let's hope this time is the same. I know there's loads of doubts and fears that we are gonna actually first go to that 88. In my opinion, it will be nice to have some sort of strategy if you're going to go long, to understand that there is some upside thanks to that alpha, but if the alpha failed, because it can fail, definitely you have a plan of what would you do if the price goes to take all this liquidity in here, assuming there is some bounce from there as well. Let's look at the targets for that potential alpha playing out. To the upside, we have 99k is the first significant level at the top of the price, followed by 102, 103, and pretty much 105. fair value gaps agree precisely with that. You can tell that we have left fair value gaps from 99k all the way to 105. Fair value gaps are pretty much saying if price can get into the neck of the double bottom formation, again at 99k, and it continues going higher, maybe with the incentive of this fair value gap located at 100k, it could continue and grab up until 105 too. Before I go into general markets, I'm gonna show you how we are doing on SOPR. The SOPR stands for Spend Output Profit Ratio, which tracks the profit level of all moved bitcoins during a given period. It indicates whether sellers are in profit or loss when their transaction takes place on the blockchain. So more or less, it means whether you unload your bitcoin mostly in profit or mostly in loss. When it's a lot of losses, it's a bottom. When it's a lot of profit, it's a top. And this is the way it traditionally looks on a chart. But in the TTP subscription with the VIP package, you get this indicator included, which is another way of looking at the SOPR, more of an oscillator with bands telling you when you are in the extremes. So think about this area coming into the first band as the indicator telling you if we reach that bottom, we are having loads of people selling their Bitcoin at a loss. And since these bands are calculated with statistics, it's telling us that is a great area of value. As you can see, we haven't touched it yet. The last time we touched it was on the 10th of October, and that was this low at 59k. After that, we went to 108k, or on the top, we pinch in here the band from the top, and we have a drawdown of 9% after. Ethereum went into the area of value when it reached 3100 as well. So I am keeping an eye because the signals from this have been pretty good. The last time we confirmed signals were the best entries, not just of the megaphone pattern, but from the previous bull flag before as well, and all the way to the beginning of the bull market. Best entries 1, 2, 3, 4, 5, 6, 7 best entries in the whole cycle just using on-chain data. This works for Ethereum as well and Lithium. You can see all the past performance across multiple years if you want to have a look. All right, general markets. Dollar has been pumping to $108 in the morning. Pretty annoying, not what we want. About to potentially invalidate the bearish divergence. Remember, the candle just opened on Monday on the weekly, and if we close this week above a level of 70 on RSI, that is invalidating the bearish divergence that we could put if we close the week pointing down like this. A bearish divergence right after the breakout on the weekly time frame for the dollar will be something really cool that could alleviate the stress that the dollar is currently putting. Gold is coming down. VIX, also considered kind of the fear index from the S&P, is pointing up, putting a new high. Unfortunately, on Nasdaq and S&P, I cannot see pre-market in this chart, but I can have a look at some stocks, and some stocks pre-market prices are higher than they closed last week, starting with Google, Apple slightly, Nvidia, yeah, maybe 2 points above the closing price. Amazon is also positive. Tesla with $9 up in pre-market. That seems to imply that there is some positive sentiment towards the market open on today. Hopefully that's gonna translate into positive price action on Bitcoin as well. Guys, if you want to trade Bitcoin altcoins, consider trading on Bybit. I have a link in the description. If you use that one, you can claim up to 30,000 in rewards and the lowest fees to trade. The bonus on my OKX link is even larger. Don't miss the opportunity. This one closes on the 2nd of January, where you can claim up to 60,000 in rewards. But if you want to stay away from KYC, I have two exchanges, Bluffin and 2bit. There is a campaign that ends today on Bluffin. I'm sure I will have another different campaign starting from tomorrow. This one is offering up to 10% cashback on your deposits. The beauty of not needing KYC is that you can open as many accounts as you want with different emails. Not needing a VPN is really nice, and not having issues withdrawing and deposit crypto to me is the best. But some people have reported probably less than 1% of locations still require VPN. If that's the case for you on Bluffin, before you deposit, test it. And if that's the case for you, you can go with 2bit, currently also offering deposit bonuses. You can see the instructions on the screen, all links in the description. During the holiday season, guys, I'm going to slow down in amount of videos. Probably the best I'm going to be able to do is 1 video per day. So if you appreciate that I'm gonna give you company throughout the holidays, consider hitting that like down there, writing a comment, sharing the video, retweeting my post. Anything that you can do is very well appreciated. I'll see you on the next one. Bye bye.